Hi, welcome to my channel. Back with a demand from the community. The students of college wanted to know how to go ahead and build their credit or repair the credit, which you'll go ahead and learn in 6 easy steps in this video. So go ahead and also stay tuned towards the end where I'll be able to give you a cheat sheet that I went ahead and created for you to go ahead and always have this information with you at all times. And then also, this is an intro. If you want a little bit more in depth, I make a video every Sunday going over of every detail of your credit, which I'll put somewhere up here. You'll be able to see it. Or if you wait towards the end of the video, that video will be recommended to you to go ahead and review. And let's go ahead and get some housekeeping out of the way. This are my credentials. I am a credit analyst slash loan underwriter, where pretty much I approve loans for a living. So I know how to build and when to make a decision to give someone a loan. So that's a little bit about myself. Let's go ahead and jump right into it. Let's go ahead and start off with you gotta first be able to access your credit. So start off with signing up. So signing up, I recommend go to Experian.com, sign up. You're gonna put in some personal information and verify your information. This is gonna be your home page to check where your credit score is at, anything that is reporting, any fraud that is happening, anything you need to report on your credit report. Experian.com is going to be the spot. You can get Credit Karma, or if you have a bank account with your financial institution, you can't sign up for them. But if you're looking for the credit score that the lenders use, which you have to have access to through Experian, and then pay their membership, which will go over into that. Um, that's where you gotta have it. But it is okay if you have like a Credit Karma or have it through your bank. The whole point is you want to see what's on your credit. So signing up with those is priority step number one. Next, why does credit matter? This is why credit matters. Whether you need to get a job, car insurance, need to apply for an apartment, which I imagine you had to do, get student loans, buy a home or a car, you need credit for it. That is why credit matters, and also for how much you borrow. So there's a difference between having a 15% interest rate and a 5% interest rate, which you can already tell by the numbers of the difference. But essentially, there's a difference between someone that will pay $5,000 for borrowing 1,000 versus someone paying maybe 500 or $200. So you can see where your credit score will matter. That's why credit matters. It's something that it's kind of almost unavoidable for you to have. A lot of places requiring it. So in order for you to have it, that's why credit matters. All right, let's get into number two. Your credit score. What is a credit score? Essentially, a credit score ranges anywhere between 300 to 850. Um, so look at the credit score as a grade that you would get from college. So like you have an A, B, C, D, and F. So lower it is, think of it like an F. The higher it is, think of it like an A. That's pretty simple. And maybe you're thinking to yourself, well, I guess how do I get started on increasing that number? So there are 5 factors that it comes when it comes to building your credit. This is the cheat code or the algorithm, which again will be on the cheat sheet, but it is going to be your payment history. That is going to be the number one. So how have you been making all your payments on time? That's pretty self-explanatory when it comes to payment history. Next is amount owed. How much debt do you have? Like, do you have 5,000, 10,000, 75,000, 100,000? That stuff does matter. So making sure that you don't have as much as possible. Next is going to be length of credit history. This is how long you've had credit for. Have you only had it for 6 months, 3 years, 10 years? That is the third biggest factor. Then you have your credit mix. There are 2 types of loans that you can have. One is revolving, which ends up being credit cards, and then you have installment loans, which are close end, which means they are only open from one point and they close at some time. With a revolving, which is open ended, either when you decide to go ahead and close it or the lender decides to close it. Those are the instances we'll go ahead and close out. So making sure you have at least one of each will make sure that your credit score continues increasing. And the last one is going to be new credit. New credit is when you open up a new credit card or a new installment loan. That is the least factor that goes into your credit. So that is essentially what your credit score is. Moving on to the next, it is going to go ahead and be how to build your credit. All right, so essentially how to build a credit. So if I was in your position, what I would do if you have no credit, this is what I would do. First, I would either get a credit card. Again, you have to have a revolving. So either get a secured credit card through somewhere where you have your checking account from. A lot of them do offer it. So if it's a bank, a credit union, a financial institution that is online, like a Capital One, or maybe Santander, or maybe Federal, a lot of those are online. So opening up one of those, if you have a favorite store you like shopping at, those are very easy to get because again they look towards people that don't have the best credit or have very limited or new credit, so those are easy for you to get approved. Next was going to be a authorized user, so making sure that you find someone that has a high credit score, whether that be a parent or a friend, which you essentially just tell them, hey, can you put me down as an authorized user? But this is the catch, you can't just do this with anybody. You have to find someone that has at least a 750. So it is going to require for you to ask them what being an authorized user does. It inflates your credit score. It doesn't help you get approved, but it increases it without you having to open up a loan. So that is kind of like a nice little double-edged sword that'll help you, but it won't always help you get approved for a loan. Next is going to be an installment loan. I would recommend if you do a buy now, pay later. I know you heard so many of people doing Carlarna or maybe Affirm Afterpay. Those are the places that offer those type of installment loans. That's a little bit more easier to get versus getting a car loan. There's a lot of more different factors that it comes when you want to buy a car. But in installment loans, it's pretty easy. You'll have the term that will range from 3 months to sometimes 4 years, but it depends how much you take out. So I recommend taking at least 1,000 if you can afford it. That is the whole point. You don't want to get something you can't afford. So getting that, because you'll at least have a 1 year to pay it off, and that's at least 1 year that'll report to your credit. Ideally, it's always better to get a 1.5 to 2 years. So obviously that would require getting more, but I would just start off with 1,000, see how you manage that, and go from there. Or let's say if you have a car that you own that you don't have to pay anybody besides insurance for, you can take out the value of it in exchange. The financial institution, like your bank or credit union, will report that to the credit bureau. Those you can have a longer term and you can borrow more. But again, remember, be careful. You only borrow with how much you can. The whole point is to build credit and build up to that 2 year history. It is not to get yourself into debt. So if I would go ahead and be in your position, that's how I'll build credit. Here are a couple things to watch out for. Making sure you make your payments on time. That is, remember, the highest factor when it comes to your credit report. Have you been making your payments on time? You have until 30 days if you don't make it on time before it reports to your credit bureau, but you don't want to be making that a habit. You want to make it on the due date. Another is going to be letting accounts go to collections. So stopping and paying is a no-go. If you're trying to build credit, why would you stop paying? So what happens is after you stop paying around 3 months, the lender will be just like, you know what, this person's not going to pay me. We're going to send it to collection, which is now going to add that, which is you already have missed payments. already affecting your credit score. Now you have a collection. Whenever you have those, yeah, that will start going ahead and affecting your credit. Next one, maximizing all your credit cards using 100% of your credit limit. If you're trying to build credit, you don't want to go ahead and do that. You want to only use 30% of your credit limit. How do you figure this out? Is you gather all your credit limits, times it by 30%, and you will get your how much you can't use from your credit card. So let's say if you have 1,000 times 30%, that equals $300. So you can't pass it. It's okay for you to pass it, but if your points to build credit, you don't want to exceed that. It will just start pushing down your credit. That is a very high factor when it comes to determining what your credit score is. And again, it's impacting your second biggest factor, which is amount owed. Remember, the more debt you have out there, the lower your credit score does tend to be. So that's why. So those are little things to watch out when you're having and you're building your credit. All right, let's go ahead and talk about student loans and how that affects. Very plain and simple. Do not miss your payments on your student loans. I know you've seen videos where people's student loans are reporting back on their credit report because they stopped paying. You see how student loans can help you, but this is where it can also affect you. Like when it comes to student loans and you apply to get, let's see, like a credit card or a car, we won't count that against you because student loans, you can just pay 1 month and stop paying the next, as long as it reports that way. So when we're looking at your report or your credit report, we won't really take it into account when it comes to giving you loans, but it does affect your credit score because again, it's something that's being reported. So anything that's being reported affects your credit score in terms. So again, if you're in deferment with your student loans, stay in there so it can still report positive, because if you're in deferment, it doesn't affect you. But once you start missing your payments, that affects you. So, and then also make sure you minimize the amount of student loans, because if they are reporting and they're not in deferment, those payments can count against you when you go to apply. So that's touch a little bit bases on the student loans. All right, the next is going to go ahead and be myths to go ahead and ignore. This is going to be checking your credit score. When it comes to your credit score, checking it will not help you. The 3 credit bureaus, which ends up being Experian, TransUnion, and Equifax, know people need to check it to make sure it's reporting accurate and no one has used their credit. So they understand this and they won't hurt this, or this won't hurt your credit score for you checking, which means essentially penalizing your credit score. Next is gonna go ahead and be paying off your loan early. That will affect your credit score, because the whole point of building credit is to see how you manage and pay your loans on time. So if you have something open for 2 years, but you said, nah, I want to pay it off in 6 months. If your goal is to build credit, that will not go ahead and help you build. You have to have that long-term payment history. All right, here is a bonus one for you to go ahead and know. Here's a bonus tip. Make sure to freeze your credit report. So you have to sign up in order to freeze it, which pretty much doesn't allow anybody to look at your credit report. So if your social security does get stolen and someone's applying, it's going to be show frozen, which then means that person can't open it up. How you do this is by going through each of the credit bureaus that I mentioned and placing a freeze. I'll make a video in the future how to do that, or if you just contact me, I can show you how to do it to avoid making this video longer. So you want to go ahead and always make sure to protect your credit score. All right, those are pretty much the tips, very basic. Again, if you want the cheat sheet, go ahead and send me a text message saying cheat sheet or an email, and I'll email it to you or text it to you so you can have that, so you can always keep that with you at all times. Again, if you need help with your credit, go ahead and contact me and I will go ahead and be able to help you. And like and subscribe. If you have any questions, put them in the comments. I'll go ahead and answer you, and see you guys on the next one.